Joining us now to preview those results, we've got Michelle Connell, president of Portia Capital Management. Michelle, thank you so much for joining us this morning. All right, let's talk about the setup going into these results today. They've beat expectations recently for several quarters now. What are you expecting coming up today?
Well, thanks for having me, Diane. I'm very interested to see what they say about their government business. That's what spooked the market the last quarter. This is a really strong company, as you said. They've consistently beat earnings on top and bottom line expectations for the last 8 quarters, as they did last quarter. And they still confirmed their guidance going forward, but they said there might be some weakness on the Fed government side. And I think that's what we need to focus on.
How big of a risk or catalyst is that piece of the puzzle for them from your point of view?
It's pretty big, even though we don't know exactly the percentage of business they have on the government piece. We know it's substantial, so it's important. But also keep in mind, this company is really strong. They have an all-in-one identity platform that is very well thought of. It's very competitive with Microsoft and Oracle, and also with CyberArk, which was just purchased by Palo Alto Networks. So I think Okta is interesting and bears watching.
So it bears watching. Now, it's won market share, as you mentioned, from those heavy hitters like a Microsoft or IBM. How sustainable is their competitive advantage?
I think it's pretty sustainable because they're one of the few that has one-stop shop for security for AI. And it's also seen as a more neutral way of getting the security you need for AI. If you use Microsoft, of course, or Oracle, you're probably going to have to use their product, right? But with Okta, you just buy what you need and you don't have to worry about having the same consistency throughout your software. So I think it's pretty competitive, and they've continued to show that. And I'm excited to see what they say today. And I also think there's some opportunity. They've recently reorganized their Salesforce to be more focused on the AI needs of their clients.
Okay, given that they've reorganized their Salesforce, do you think that moves the needle in terms of gaining any more market share?
I think it does, but as you know, whenever you have a reorganization like that, it's going to take time, right? Sales, especially sales at this dollar point, it doesn't happen in one quarter. It's probably going to take a few quarters for us to start to see some of the positive feedback of that reorganization. I think it's going to happen, but I don't think it's going to be, you're not going to see it this quarter. So I'm sure they'll touch on it, but also that bears watching. And keep in mind, this stock is very cheap versus where CyberArk was. So it's a potential takeover candidate as well.
Takeover candidate. Who do you see in terms of targeting it?
You know, that's a good question. Any of the larger players, you know, Microsoft always has a lot of money. Anybody who has a big war chest, potentially Oracle. I think there's a number of players out there that would be interested in them. There's so many big tech companies that have large amounts of cash sitting on the books, and M&A is becoming more and more prevalent, especially this year in the tech space. We're going to see more and more announcements, maybe not with Okta, but you're going to see more in this space, especially because software has not been bid up like hardware and semiconductors. These stocks are still pretty cheap.
Let's talk about the targets when it comes to free cash flow margin. So the company, top management, targeting more than 20%, more than 25%, honestly. But the street is estimating closer or less than that, essentially. When you think about, you know, the divide between what the street is estimating and where they are targeting, how important is it to see progress on the front towards the higher end of their goal?
Well, at the end of the day, it's not valuation itself, by itself, rather. It's cash flow. And Okta has been very good at consistently getting their free cash flow margin at a higher level. They're currently at 19%. By the way, they're targeting 27%. So that's a pretty lofty goal. But they've been very consistent and good about meeting those goals. What's the time frame that that's going to happen? Is it going to happen this year? I think that's pretty aggressive, but they're good at keeping costs down. They're good at getting out there and getting their story in front of people in terms of why AI security is so important. And there's still a really big marketplace in front of them of customers that haven't adopted. If you talk to most large companies, Fortune 500, about 37% are still really concerned about their security for AI.
Okay, yeah, and look, all eyes be on Okta for those results later today. The stock's been an outperformer year to date, different story year over year. Michelle, we'll leave our conversation there for today. That's Michelle Connell, President, Portia Capital Management. Thank you, Michelle.